Welcome traders to this educational video of Nifty Short Term View, episode number 53. In today's trading session, we saw a lot of volatility, especially in the Bank Nifty and the Nifty futures. We saw that Nifty futures did open at close to 17,456, made a high of 17,505 and again made a low of 17,441. So you can see there was a lot of volatility basically in the Nifty futures, and this caused a very big hanging man candlestick in the Nifty futures daily chart. And the main culprit for this volatility, I believe, were the PSU banks and the realty index, especially the PSU banks, because you can see PSU banks had a very nice run. Stocks like SBI, you can see the sort of run up they had. Stock like Bank of Baroda. Even this particular stock made a hell of a run. And I think after such a stupendous rally, some sort of profit booking or some sort of consolidation was naturally expected. Now, coming to the Nifty futures daily time frame chart, what we can see is this blue horizontal band. Now, what is this exactly and why I have put it up over here? Now, this is a gap which had been formed on, you can see over here, 18th April 2022 due to a gap down, and after that this was never filled. And this particular gap is a very important, I guess, resistance even in the weekly time frame chart. And you can see over here it is important because these two candles, this is a inverted hammer or a shooting star and this is a high wave candle. The tips of these two candles basically are almost close to this particular band. This is the reason why this particular resistance band is extremely important. All right. Now, coming back to the daily time frame chart, if I convert this chart to a line chart, we can see a higher high in price and we can see a lower high in RSI. So yes, this is confirmed that we certainly have a negative divergence in the Nifty futures daily time frame chart. And if you look in the hourly chart of Nifty futures, we can see a big sell-off today, a big hammer over here. And thanks to this particular Fibonacci retracement support, which was at 17,255, 250 thereabouts. Due to this, we had a decent pullback. If this pullback wouldn't have come, we could have possibly slipped towards 17,100, 103, and I would not have been absolutely surprised. Now, what does the view remain on Nifty futures? First thing is, my friends, the trend of the Nifty futures certainly remains up. All right, there is no sign of reversal over there. But if you remember in my previous educational video of weekly sectoral analysis, I had clearly mentioned possibly this or this day, I had probably mentioned that some sort of consolidation is needed in Nifty futures. And if you see properly, more or less in the last 4 days, Nifty futures has possibly traded within a range. And if you want to check properly, you will be able to see more so in the in the hourly time frame chart. You can see overall Nifty futures have been continuously consolidating. Now, the view remains same that the trend is up. If there is a profit booking, probably the first support which could help Nifty futures stay afloat in the extreme short term will be 17,250, 17,254. If this correction goes on further, if this correction catches up in the daily time frame chart, all right, then I guess this entire band will act as a very important support, which is from 17,050 to somewhere around 16,900. This is very important support band, and we'll have to understand how price is reacting over that. It does not mean that once we hit this support, then immediately the rally will start. No, if at all, first of all, the correction is going to come or not, that is also a question, because when prices are generally extremely far away from the moving averages, either a profit booking comes and suddenly price drops down, or else, we continue consolidating the way we have been doing in the last 3-4 days, and the moving averages try to do the catch-up work, and then the consolidation ends at some point of time. So I think only time will tell us how things are going to pan out. Overall, I think currently the market is pretty much stock specific. And more or less, I believe the sector which is picking up right now is the IT pack, and I'll speak about this in a moment. And before that, I will like to share information about Bank Nifty futures. In Bank Nifty futures, I believe if you convert the candlestick chart into a line chart, we certainly do not have a negative divergence in the daily time frame chart. But yes, in the hourly time frame chart, we can certainly see some sort of negative divergence present in the RSI in the shorter term charts. Now, again, it is certainly clear that the trend is pretty much up in the daily time frame charts, and it is little bit overstretched. So some sort of consolidation, some sort of profit booking, I don't think it will hamper the overall trend, because the way Bank Nifty futures have rallied from the lows of 32,325, I think this has been a very nice rally. Some sort of consolidation, I think, is very, very necessary over here. And if you see overall in the last few days, in last 3 to 4 days, overall even Bank Nifty has been consolidating. More or less, it has been within a range only. Today's candle has been, you can say, the range expansion day for Bank Nifty futures. All right. So in terms of extreme short term, I think this particular low, this 50% retracement in the hourly time frame charts, which is at 37,275, might act as a decent support. And probably if this, in case if the correction continues in the next few days, in case if it does, then the next support which will be important is this particular gap, which can be seen even in the hourly time frame charts, which is from 37,026 to possibly somewhere around 36,693. All right. And again, exactly what sort of price action happens over there is very, very important. Now, coming to the IT pack, I think I have been maintaining a stance since long in my weekly sectoral analysis videos that IT is trading at a pretty much important support in the monthly time frame charts, especially because of this candlestick cluster. And you can see the hammer which has been made over here. The candlestick which has been made over here is hammer. The monthly time frame chart is average. It's not extremely outstanding because the trend is not up. Until and unless the trend is not up, some sort of breakout doesn't come, we cannot have a very big trend in the monthly time frame chart. But you can probably expect some sort of run up happening in the short term in the IT space. I think these stocks can run up from a perspective of short term of anywhere between 3 to 8%. I guess two stocks are showing a little bit of promise. One is Infosys, the way overall chart is shaping up. If this rally continues, probably it will try to, fill this gap somewhere over here. And the second stock which has started showing some sort of promise is, I guess, TCS. Apart from that, Wipro, HCL Tech, Tech Mahindra, all these stocks are pretty much subdued as of now. We'll have to wait for a few more days and probably find out that are other stocks participating or not. If other stocks start participating, then I guess these two stocks will also start running up pretty much fast. But as of now, the view is that this run up, if it happens, it will be only within a span of 3 to 8%. I think once this once the gap in the Infosys chart gets filled up, after that, we'll be able to understand what's the next move in IT pack. And even if this entire this entire gap will get filled, we'll hit a resistance band exactly over here within the level of 1667. So just be careful about that if you're participating in the rally of Infosys. All right. So I hope this educational video helped you to understand how markets will pan out in the next few days. Do drop a comment below in the comment box to share with me how do you find the video. Trade less, trade wisely, stay safe. Thank you.